If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Very nice to see Vechain continuing with the pump. We have retraced a little bit, but I think this peaked out at about 12% today. Let me just double check that. Yeah, so this was a 12% move that we've experienced today. We are currently up 5%, I believe. Yes, that's correct, 5%. And today we actually met my 3-cent psychological level technical target that we spoke of all the way back in early November or even October time. It was all the way from back over here. Yeah, it was pretty much October, November time, where we were suggesting that if we push through the 200 and see the golden cross, we should eventually see a 3-cent psychological level being tested again. And we got that today as we peaked out at 3061. So nice to see that actually came to fruition after months of waiting. This was an exceptional move. Let's go from the bullish crossover here. This was a 70% move just to where we are right now. So very nice gains over the past few months, but we need to see this continuation. If you remember from yesterday's update, we said it's all calm. Even though we dumped, we are above the 20. So we're looking for continuation in the short term. And then the direct next day, we were given a 12% pump. Yes, we are only up 5% at the moment, but finally our 3-cent technical target was actually met. So yeah, Vechain is continuing to melt faces, and in today's update we're going to pretty much show the levels that need to be maintained in order to get this bullish continuation where we will eventually break this high and target even higher than that. So we'll run through that all today. Make sure you like, subscribe, comment, share, and let's dive into this video. So again, yes, the daily time frame, we did get this continuation. Unfortunately, we're wicking off at the moment. So just before the 1 Fibonacci, I'm going to look to the left to see if there's any bodies in this area where we got a wick from. So it's previously where we've actually wicked in the past. If I draw a box marking out that wick, we can see that is why we're getting the rejection at the moment. It's a key level of resistance. Yes, we know the 1 fib level is as well, but essentially there was a little bit of an area even before the 1 fib level between this wick over here in the past back in February of this year. So essentially just retesting that key level now as resistance and then looking for support to hold. So we'll run through all of that, don't you worry. So I'm just going to get rid of that now. It's just to mark out and show you why we are getting rejected from now. And then the key level of support that needs to hold. Well, first of all, we actually confirmed the 786 as support yesterday. So this is 2685. That's the 786 fib. And as long as this holds the support, we should get continuation to our high over here, the 1 fib level 3259. And now with yesterday's candle, I like it a lot because it creates the wick. It's showing that essentially the bears had total power, and then from the 20 moving average, the bull stepped in, and you can see from wick to wick. The bull stepped in from here and pushed us all the way up there, 23% move in a day if we're talking about the lowest point of yesterday to the highest point of today. And of course from the breakout, only 5% move. But with this wick, you're confirming this level of support in the past. So it's pretty much this area over here that is being confirmed as support, and the 20 moving average lies within that. So if we want further continuation upwards, we can't lose this level of support. So just maintain above this wick 2417, and we will get that bullish continuation. Let's head over to the 4-hour time frame to see this a little bit clearer. So yeah, you can see that this was previously a resistance as we were heading into it, but using the lower end as support. And when we eventually broke out, you're doing an SR flip where previous resistance becomes support. Where we were previously having wicks to the upside, we're now having wicks to the downside, changing what was once our top now into our bottom. So that's why that is the area that we need to maintain going forward, and that's pretty much where the 20 daily moving average sits. But now that we're on the 4-hour, it is a little bit different. It's clearer to see the SR flip. However, we need to focus on the moving averages. Now, we do not have to come down as low as that, because remember, we confirmed the 786 fib level as support yesterday, and that's this white line over here, or gray line over here. Now we can see that the 20 is above that point and the 55 is beneath that point. So it's essentially creating a level of support going forward that needs to be maintained. So if we go ahead and lose this, we're coming down to the daily 20 essentially. So that's pretty much it from me today. Continue to hold above the 20, the 55, and look where the 200 EMA is. It's pretty much at the lower end of this box. And going back to the daily, we can see that the 20 EMA is around that point, with the bottom of the box being the golden pocket. You're meant to hold above that point to get that bullish continuation. But as this is a key level of support above that, I would like to see this in the immediate short term continue to hold a support. And if we can now stay above the 786, then we just don't even need to dip down to there. That's just the next level of support beneath us if we do correct beneath the 786. But as it is confirmed the support without any actual visualization that it is going lower. So right now, is it lower? No. Is it above? Yes. So it is support. And so because of that, we should just be anticipating upside. I'm just preparing you if it goes wrong, because we are getting a wick rejection, which is a suggestion that the bears are stepping in from the 3-cent psychological level, essentially trying to put us back down and invalidate those potential targets to the upside sitting between 4 and 5.7 cents. So if we want to see that continuation, not only do we need to hold above the 20 for a daily moving average over here, we need to hold above the entire golden pocket, pretty much where the 200 EMA lies. So yes, we could dump down a lot if we lose all these key levels, but while staying above the 200 EMA, you're keeping the uptrend intact. So that is why we're not anticipating this to be tested, but it's nice to see that it's on the 0.5, the lowest point of support of the reversal wave, keeping those targets between 4 and nearly 6 cent, all valid. And yeah, it's nice to see that that's the 200 EMA, the bottom of this uptrend, sits at that point, which keeps all of those targets valid. So it's essentially suggesting that you are allowed to dump down as low as there, but not that it has to. So I've drawn out today's key levels, the first one being the 786, and then the next one below pretty much where the 20 daily moving average is as our our short-term supports. If we do lose this level, this would be the next. If we lose this level, this would be the next. And that is your neckline of this inverse head and shoulders, which we broke out pretty much at the beginning of this month, sitting at already a gain of 27%, with us peaking out about 35% earlier today. Let's get this continuation. Hopefully we don't have to dip down to the 20 and the 786 holds, but it's not the end of the world, even if it dumps down there, because as we know, this is keeping the immediate short-term trend bullish. And the best examples here are in the past, where we reclaimed the 20 and the 55, and we just followed the 20. If we lose the 20, you fall back to the 55 and it brings you back above the 20. So that's what I was explaining over here. If you do lose a 20, that's there to back you up. It's also the neckline of the pattern, so you would be kept bullish. But even if you lose that, this is keeping you in an uptrend, so you would just get pushed back up into an uptrend. So it's all totally fine, everyone. Thank you so much for tuning in. Like, subscribe, comment and share. And if you want to get educated by myself, then use the links down below to head straight to the website or Twitter to private message me. Cheers, everyone. I've got a whole bunch of educational content, and over here on the website, you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls. Or if you want to take action on my 6-hour-long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.